Hey, what's going on? Welcome back to another episode of the Money Codes. My name is Joel and I'm here to give you today's money code fix. In today's video, I want to go over Navy Federal and their savings pledge loan. A couple of weeks ago, I went ahead and I did an extensive video on Navy Federal, their checking accounts, their savings accounts, their credit cards, their business credit cards, as well as the pledge loan. And I talked about how the pledge loan is an excellent strategy for credit building purposes. So I'm going to go ahead and link that video up above. Go ahead and check that out if you haven't seen it already. But very quickly, what is the advantage of the pledge loan? And why do I recommend that for people that are trying to build their credit? So very briefly, it is a savings pledge loan, which means that you're going to have to put up your own money and Navy Federal is going to freeze that amount. So what I did for this video is I went ahead and I put down $250. I put that into the savings account, and then I called Navy Federal and I told them that I wanted to go ahead and create a pledge loan. They froze that $250 that I put up out of my own pocket, and then they loaned me $250, and I'm not going to go ahead and spend money with that. I'm not going to go ahead and shop with it. I'm not going to go ahead and do anything like that. I'm going to turn around and take the money that they loaned me to pay down the original pledge loan. If that sounds weird or confusing, don't worry, watch this video until the very end, and I'm going to actually show you screenshots from my account so it can be crystal clear. But again, the whole purpose of this is, number one, if you have a thin credit profile, meaning you don't have a lot of credit cards, you don't have a lot of car loans, you may not have a home mortgage, you may not have a car note. When a lender or a bank looks at your credit profile, they're not going to see much there. So they call that a thin profile. Well, if you are a Navy Federal member, you can go ahead and create this pledge loan, and you're able to now start creating, number one, positive payment history, and then two, you can show that you actually have a loan on your credit profile that you paid down. That way, if another lender looks at your credit profile, they can see on your credit report that you went ahead and not only took a loan out from Navy Federal, but that you paid it down. This is a lot better than going out and getting a whole bunch of subprime credit cards that you're going to cancel in the next year anyway. Using this strategy, you're going to be able to add positive payment history and positive trade lines to your credit report without having to get a credit check or without having to have a hard inquiry added onto your account. And we already know from the previous videos, hard inquiries, too many hard inquiries can actually lower your credit score. And a few weeks back, I also created another video which I compared self as well as Credit Strong, and I went into detail how installment loans can actually benefit your credit profile. I'll also link that at the top of this video. So if you watch that video, or if you already understand the pros of adding installment accounts to your credit profile, you're already going to understand the benefit of why the Navy Federal pledge loan is advantageous. But another reason why the Navy Federal pledge loan is actually better in some ways compared to your Credit Strongs or yourselves is that Navy Federal is a financial institution, meaning once you start nurturing that relationship with Navy Federal, you can actually take those internal data points that you're actually building. You're nurturing that relationship. So when it's time to go ahead and get a business account or to get a credit line increase or any other product from Navy Federal, having those pledge loans paid down and paid off is actually going to make that bond with this financial institution that much stronger. How does that compare to Credit Strong or with Self? With Self and Credit Strong, they're going to be putting an installment loan on your credit profile, but after 6 months or a year, you're going to be getting those good payments, which is good, but you can't turn around and call Self and say, hey Self, I need a $20,000 loan for this car I'm trying to buy. So you can see that there's some limitations to building relationships with these companies. I'm not knocking them. I think they are great products if you're able to go ahead and get these accounts. But the fact that you can get a pledge loan from Navy Federal and use that as a stepping stone to get bigger products and better products, and you already know Navy Federal is one of the best financial institutions when it comes to giving high credit limits, you can see why this is kind of an advantage compared to a Self or a Credit Strong. So now that's the quick overview. Now let me go ahead and actually show you what it looks like inside the account and the steps that you need to take to open the account, pay it down, and to set up the payment schedule so you can be set going forward. And I'm also going to show you how the Credit Strong account and how the Self account actually posts to your credit profile. And we're going to do a very quick side-by-side comparison, and then you can make the determination for yourself which type of installment loans do you want to add to your credit profile to strengthen it. And before I forget, if you are not already subscribed to this channel, please go ahead and do that for me. Just go ahead and hit that like and subscribe button. Now let's continue the video.
Now you should already know this website here if you watched the other video. This goes over the savings pledge loan, or sometimes they call it the shared savings loan. You can take a second if you want to and check out the website and read this, but all it's saying is that you're going to be putting up your own money. You're going to be putting that money into that savings account, and then they're going to loan you an amount equal to the money that you put up. That's all it is. Now, also keep in mind that Navy Federal, they're not the only bank or credit union that do these type of loans. Just make sure you call your credit union and ask if they have a secured savings loan that you can apply for. But with Navy Federal, I'll walk you through the steps that I did. So number one, Navy Federal is not the primary financial institution that I bank with. So I just went ahead and I transferred $250 into my savings account. And then I called their customer service department and I told them that I wanted to go ahead with this savings pledge loan. They asked me some generic information. They went over some disclosures with me over the phone. And then I received an email about how to sign the documents so I can go ahead and get this loan started. Here is a screenshot of the email that they sent me asking me to sign the documents. All I did was go into the Navy Federal app on my phone. I went in there, I clicked a couple of buttons, and I was just able to sign very quickly. The whole process took maybe 30 seconds, if that. Once I signed it, you can see here that they're just telling me how I can access the information that I signed. And right here, I'm going to try to block out as much personal information I have, but the only thing I want you to pay attention to here are basically the three things: the shared savings, the everyday checking, and then the shares pledge loan for the amount of $250. So pretty much what you're looking at this point, this shares pledge loan for $250, this is the loan amount that is basically on file, on record for me. And then they ask you, where do you want them to deposit the loan that they're going to give you? I told them to go ahead and just put it in the everyday checking. And what it's showing is that I'm taking the funds out of the everyday checking, that $250 here. I'm going to take 200 of that, and I'm going to immediately pay back that shared pledge loan, that savings pledge loan. So I'm paying back the loan that they give me with its own money. Now let me say that slowly again, just in case it doesn't make sense. This is the loan that's on file. This is the loan. This is the debt amount that I owe, $250.04. This is the cash that they gave me based off of this loan. So now I'm going to take the $200 out of my checking account and I'm going to pay down this pledge loan. Not the entire amount, because that defeats the entire purpose of doing this. We want to pay down about 80% of the loan amount, and then the rest of the amount, which in my example here, which is going to be $50, I want to stretch out that $50 payment over the course of 6 months. What just happened, I was able to make that payment, the everyday checking, paid down my pledge loan for the amount of $200, and it was successful. Now, immediately after, now you can see that the pledge loan amount is no longer $250. It's only $50. And then the amount that was in my checking is now only $50. So I basically paid back the loan with its own money, and I kept the remainder amount of $50. So technically speaking, I owe Navy Federal $50.04. It's already here still in my checking, but instead of paying the loan off immediately, which again, it defeats the purpose. The whole point of us doing this is to get monthly positive payments, reporting on our credit profile, reporting on our credit report, and also building up positive internal payment history inside of Navy Federal. And we can do this over and over and over and over again. I spoke with the customer service rep, and you can actually have more than one pledge loan open and doing this strategy. You can have more than one at a time. And big shout out to another YouTuber, Nigel Schroeder. He's another young brother that's actually putting out a lot of good content. Go ahead and subscribe to him as well. All right, so now finally on this page, you can see here that you can't see at the top because it's actually cropped out, but this is the balance remaining on that savings shared pledge loan. You can see that the remaining balance is $50.04. And then what I did at this point, I called Navy Federal again and I told them I don't want to go ahead and pay this off in just one payment. You can see on here that on October 24th, they were going to pull out the remaining amount because I essentially prepaid this loan. But instead, what I did is I called and I scheduled for them to actually do smaller payments over the course of the next several months. So Navy Federal is going to be taking $8.34 out of my checking account to pay this savings pledge loan all the way down to zero. That looks like positive borrower behavior, that I'm able to pay down my loans on time without any negatives, without any lates. And in 6 months, this account will be paid off. And I can just keep doing this over and over and over again. Remember, the strategy is you want to have between 3 to 5 unsecured credit cards and make them as high quality as possible. Your big banks. So get a Navy Federal, get a Bank of America, get a Wells, get a major banking establishment credit card, and then keep doing these type of loans to build up your positive payment history, to bulk up your credit profile. And again, this was just with Navy Federal. You can do this with other credit unions. You just got to do your homework. And again, how does this compare to Credit Strong? How does this compare to Self? Okay, so very quickly, if you want to see the deeper breakdown, check out my other YouTube videos. I take more time. But on this video, I'm just going to do a very quick comparison. On the Magnum plan for Credit Strong, you see that if you pay $110 a month, it's going to report a $10,000 installment. The next logical question would be, why would you want to have $10,000? Why would you want to pay somebody like Credit Strong when I can just put down $250 with Navy Federal and get an installment loan on my credit report? That's usually a common question. But here's the thing. If you are somebody that has nothing on your credit profile and you're looking to get an auto loan, you're looking to get a mortgage, you're looking to get business financing, you want to be able to show another lender that you are able to take on the responsibility to take on a loan and pay that loan on time, pay that loan down. Having $250, $500 secure loan, like those are good for payment history. Those are good for building the relationship with Navy Federal and these other credit unions. But that low amount is not really going to send the message that I want to if I'm trying to ask another financial institution for $50,000. In fact, when it came down to Credit Strong, they actually changed their plan. There was actually another one that was bigger than this, and that's what I currently have. It actually reported $18,000, and I paid $200 a month to get that $18,000 installment loan reporting on my credit profile. It's to fatten it up. So again, quickly to recap, the payment history is awesome, but if you are trying to bulk up your credit profile so that when an underwriter, like a human being, actually looks at your credit profile, if you're able to show that you have a $10,000, a $15,000, a $20,000 installment loan that you paid on time for a year, 2 years, you're paying it on time, no late, it makes you look that much stronger. But again, you don't have to do this if you're just doing this for credit repair. You're just trying to get back on the right track. You don't need to do something like this, spending $110. You can go down and you can probably spend right here $48 a month. You can do that if you want to. They'll put in $1,000 installment loan on your credit profile, and then you'll just pay that every single month. Very similar to Self. So with Self, you just pick the amount that you want to spend. Let's say we chose $48. I'm paying $48 every single month. And then at the end of the term, I get my money back, $539 minus their fees and all that stuff at the end. So that you can see that it's very similar. Credit Strong, Self, the Navy Federal Savings Pledge Loan. They're all very similar, but they all kind of have different purposes. With the Navy Federal, all you need to do is just put down $250 minimum. If you want to put down more, you can. But like I said, if you only have a very thin credit profile, you only need to put down $250. Just do what I did that I showed you in those pictures, and you pay that off after 6 months and you're fine. All right, so finally, the last thing I want to show you is how these accounts are going to report on your credit profile. This is likely going to be the determining factor for what account or which account you're going to choose. So right here, we're looking at the Credit Strong account. As you can see here, $18,000 was the installment loan that's reporting to the credit profile. Reported balance is $17,142. The monthly payment is $198. Remember, I told you before that this tier is no longer available at Credit Strong. I believe right now the highest one is $98 for a $10,000 installment loan reporting. Having this on your account for, let's say, 2 years, never missed a payment, always paying on time, this amount is going to look good in the eyes of an underwriter. The downside is this high balance, or this reported balance here, is actually going to impact your DTI, your debt to income ratio. So if you are somebody that's going to be looking to apply for a mortgage anytime soon, you may want to reconsider getting credit strong if that's going to mess up your DTI. That will be a question that I would probably check with your loan officer or your lender prior to signing up. But again, that's just something to keep in mind. And then here for self-lender, you can see that this one was $48. This was the minimum, I believe, that self offers. In contrast, $539 was the installment loan amount, with only $187 being left reported, which is good. So if a lender looks at this, they're going to see that this account is almost 70% paid off. But if you do the Navy Federal strategy that's in this video, you're going to be able to emulate or to duplicate this type of credit profile after 30 days, which means you're going to have $250 here, and then reported balance is going to be $50 here, and then your bar is going to be, probably around here somewhere. So you're going to be able to show that you already paid down that debt, and then you only have a monthly payment of, I think, about $8 a month to finish off that loan if you go the Navy Federal way. If you're somebody that is looking to, at some point, get an auto loan or get some sort of business financing in the near future, and you want to be able to show something that is strong, you don't have an auto loan, you don't have anything like that on your credit profile, then I think something like a Credit Strong and going with one of their higher installment plans, that might be a better choice for you. But depending on your credit profile, depending on what you actually have on your credit report, it's hard to recommend one over the other. I'm just doing this video to basically explain to you the pros and the cons, so you can go ahead and you can make a better determination on what's best for you.
All right, so that is the end of the video. I showed you the side-by-side comparisons, and I gave you the pros and cons to both Self, Credit Strong, as well as Navy Federal, and how all three are great products to go ahead and improve your credit score. If you found value from this video, you already know what to do. Go ahead, like and subscribe, and leave a comment down below, and I'm going to check you out in the next video. Peace.